Good morning, 8:29 a.m. Pacific Standard Time. Netflix is the subject. How about that? What is it about? Price action. Each one of these lines are 36 cents. We made the intraday high. We had to identify the directional price movement change. Part of what you're going to witness is what the MMTs did is they got paid twice in one directional price movement. Yes, they did. They got paid two debits. And the debits were shorting the equity outright intraday, identifying the script. They already knew that in their market maker platform that each line is a 16th in their market maker platform, and that was 36 pennies today. And they identified the mathematical intraday ratio TR, trend ratio high, and our platform and what the reversal would be like. But you can see that he went up and down 2 pennies at 72 pennies. Look. And how do you validate them? They always got to have a big red bar like this or they're not validated. That's number one. And it's called a 2 penny rectangular mathematical algorithmic buy and sell with machines in 72-cent price ranges. And some a little bit more. But the broader part of it is 72 cents. It doesn't lie. It's true. So when we broke below all of these half bars right here, that verified it. And all of that consolidation of that 72-cent penny range into a morning high. Right now we have 2 hours on the opening bell. So they had two entries. And the way that it went down was identifying opening bell price volatility. Yes. And what that price volatility would look like. We can see here how we had breakouts here, but when we got the pullbacks to the half bars, we broke up, we challenged highs. It was in this reversal bar where the transaction took place. And what time was that? It was 10:03 Eastern Time. The open was in that bar. What the open was 217.82. He popped it to 218.97, and the low was 217.65. Okay, that was in this reversal bar. Then he comes back and he gets up toward the highs, and here's that 72 cent. That's that two teeny price range, and then the reversal to go with it. With the teeny, 1 teenies, 2 teenies, 3 teenies, and then now he's 4 teenies. So he's got, the script is 3, 5, and 7 teenies. And he's right in the range here. So MMT, you had 2 entries shorting the equity. Then what you did, based on the intraday range of the equity, you went over and you got hit on the low of the day at 8.75, and you limited it out at 9.9, and you took your profits, and you got paid in this directional movement with the 220 May regular put. The thing about price is how price weakens. This was an algorithmic program on the buy script on the intraday morning high, the morning high. And then you identify the directional price movement, and the diamonds validate which way the bot system is working in the ECN and exchange models. Okay, MMTs. So when we look at price weakness, we look at a couple of things. We look at the IR, did not meet a criteria yet. The identity is 219.75 as a high, intraday morning high. How do we validate that? Well, it's simple. We're 200 pennies right now, 252 pennies off the intraday high. Okay? That's for the short side of the tape that you did. Not only because of that, coming off of the intraday high, the bigger that this number gets, then the options go higher in value. As a market maker in the option pit, with the market maker working behind the scene here and pegging that 875 low and stole it from all the other bot systems and the kind of premiums that they steal electronically. Okay? They opened at 1132. the entry was at 8.75. The exit was at, to take mark-to-market profit for what needed to be done, is that it had to be exited, and now it's going to be re-entered again. And the criteria here is that we're 216.81. The validation model is that this has to go down to 45, but when it comes up again from the support level of that teeny, it's mathematical. Another two teenies down. So right now we're 2.86. That's $2.86 off of that high. And now the validation in price to confirm 219.75 intraday morning high, to confirm that you short again at higher lows in price. Because that bot system, the electronic algorithmic bot system that was used on this opening today, you can clearly see right here, 3. Now 6, look at how many teenies it was mathematically. 1, 2, 3, 4, 5, 6, 7 times 36 cents. Yeah. So now, to confirm that that is the intraday high, what are we going to do? We are going to confirm that the intraday movement back up, we can go long and sell it back up here in these resistance levels when we put a bottom in. If we do not regain 65 or higher, that is the first identity in the market maker brain that the time cycle period ending at 8:36 a.m. Pacific Standard Time is, how do I establish the electronic bot system? And that is selling the bid down and supporting that short, or taking it up the way that he did, as we know, right here on the opening bell, and he held the half bar and bam, went up and made these higher highs. And this is where you took your, this is where you started making your entries. You had a volatility opening bell entry. It hit it, it dropped, you bought the cover, you got out right over in here. Okay? And there's was that contraction. You can see the diamond, 1 teeny, 2, 3, 4 teenies, but it was above the half bar. And that half bar at that time, as we pointed out, that was $214.82. And now you can see that he's printing right back here to where that original teeny bot reversal got support and the diamonds popped. It's going to come down and test it, and it's doing it live, and it's doing it here, and it's doing it now. The thing about the MMT is I got paid twice in one directional movement. They got paid by shorting the equity twice intraday up here during this resistance, and how that teeny volatility of 72 cents, but what the reversal was like, and how to validate it, and how to take out these other half bars on the way down, and how to validate that we got a total right now, do the math, 216.80 to 216.91. That was where he shot that high right here, MMT. And yes, I did have contracts, and I still own some marked out at 1020, 1050, and 1070. And now I'm going to figure out where my next entry as a market maker in this pit here will take place. And so they closed at $11. They're still marked down below the close. And we can clearly see here that we've tested this teeny line right here where that breakout high happened intraday morning here. And that it's only validated in one way. Mathematically, this 45, you have to go lower now. And this intraday ratio, instead of being where it was up here, this up here it was at 99. It's in the info panel, IR 99. Well, to verify a price directional change in price movement is where do I go long for 1, 2, 3, let's say 4 teenies higher, right back up here. Sell it and then go short and make a lower low. Due to the fact that it's 8:39 and it's a FOMC heavy meeting today that's in progress, heavy things on the balance sheet for America. Okay? Making a market, though, is making a market and getting paid twice in the directional movement. Twice. So, let us not forget, to be a market maker in the option pit, you must understand the mathematical equations in price movements. They vary because everything has a price movement, whether it's algorithmically being bought in milliseconds and shooting them to the highs, or crossing the bid and selling it down. This diamonds in here, they all validate what their plan is. Okay? And not only that, we're going to bid these contracts out again at $9.20 for now. So you have to have some of these out there marked to market based on the timestamp of 8:40 a.m. Pacific Standard Time, based on the fact that if we do pop up and going long down here, just remember 45 is the weak area. That's confirming the intraday high is in no matter what. So it's not, so it's the intraday 2-hour intraday morning high, MMT. So directional price movement is what we look at. And where does it weaken up and make lower lows and trade below 215 and a quarter, even down to 213.75? Now I'm going to conclude how to make markets and getting paid here and knowing when to exit. Just because the bid is $9.85 by 10.15, that's what it is. And exiting at $9 was the right thing for the MMT to do. There are higher exits that we do have, but that was the right thing to market that entry and that exit based on this directional price movement. And let us not forget, the higher the IR goes, this only came down to 0.37. That's where it is. 0.83 was a ratio high. 13.23 teenies times 36 equals $4.73 to the positive, where that short took place. Okay? Now, you can clearly see you're only 2.59, 2.38. You can see the candle go up off of the intraday high. That's why you have to sell. And then, based on the directional price movement, is that we're going to bid some of these contracts at $9.20 on an intraday level. And we're going to bid 5 of them for one new MMT that's in the live room. And the other MMT will do 3 of them. And then that's based on the directional teeny value, ascending value, descends the value price in the bid of the 220 put. What does that mean? Goes lower, not higher. But you have to break up for this print to go lower. So it's a weak movement off the bottom. He's 52. He's not above 55. And we do confirm intraday 2-hour morning, intraday high of the day. But it was established in the first 2 hours, unless there's a headline. The algorithm that's been used in the directional morning price movement has rested itself at this period of time. In directional price movement, getting paid twice in one movement. But you have to grow into it. As you grow into it, you become more comfortable working with a very manipulated system. People who want to buy intraday equities or options for that matter at a certain set market price value, electronically they're manipulated. So you know that your playing field is stacked terribly against you. But it's all about identification in price, the identity of price. With algorithms or people, it doesn't matter, it's all the same. It took someone to program it, was a human that programmed them. So the thing about it is, mathematically, if we bounce up to 217.90 by 218.50, well, these bids will drop in value immediately to that 920 entry. Right now, it's 8:44 a.m. Pacific Standard Time. It's 4:30 of calendar 2013. This is what new MMTs of making markets and options. establishing intraday morning high reversals, how to get paid twice in a directional movement, and how they utilize their intraday morning buying power to accomplish that goal.